All right, so this afternoon we're going to be looking at candlestick patterns. Thank you for your feedback, Mr. Lawrence. All right, so like I said, we're looking at candlestick patterns, the practical side to this topic. On Monday, you had the theoretical class. Now we're having the practical class. So I'll just brush through. I won't go into details, just brush through just a little revision of what you've done on Monday. Then we'll go straight to the chart. You know, yeah. Candlestick patterns, candlestick charts were actually developed by Japanese rice merchants in the 18th century. And so said that a candlestick is made up of three parts. You have the upper shadow, the lower shadow, and the real body. And we have four price part also, the open price, the low, the high, and the close. And the size of a candle depends on the volatility of the market. Bigger candles will have, indicate there is more volatility in the market, while smaller candles indicate that the volatility in the market is low. But then the area where we're putting our focus on is actually the patterns that are generated by these candlesticks that can point us to the direction of the market. I always tell my students our main job as forex traders is to identify the direction where the market is going. Then the second thing we do is to follow the market where it's going. You know that cliche, follow Uno road. That's basically what we do. We are not reinventing anything new. We just want to know, is the market going to buy by so and so parameters? Then we buy. Is it going to sell? Then we sell. So the candlestick patterns are patterns that can point us to the future direction of price. Now, by the word future, I'm not talking about a distant future. Future could be in the next 5 minutes, 15 minutes, 1 hour, 1 day, or 1 week. It's still part of the future we're talking about. So the first candlestick pattern we're looking at is called the hammer. And we say that the hammer is found at the bottom of a downtrend and is made up of a candlestick with long lower shadow and small body. And we also require a confirmation candle after discovering the hammer candlestick pattern. And we also look at the shooting star, which is the direct opposite of the hammer. So while the hammer is found at the bottom of a downtrend, the shooting star is found at the top of an uptrend, and it's a candlestick with a long upper shadow and small body. Now, just like the hammer, the color of the candle may not necessarily matter, but then a red candlestick for the shooting star indicates more bearish pressure, which is indicative of the direction the market is expected to go. We'll also look out for a confirmation candle, just like we did for the hammer candlestick pattern. Then we talked about the bullish engulfing candlestick, which from the word engulf, it means one candle superimposes itself, completely covers the previous candle. Here we can see in the diagram a bullish engulfing candlestick pattern where the bullish candle completely submerges the previous, red candle. This is what I'm saying. This is the big green candle after the red. The green candle itself is no confirmation, so we don't need any confirmation after we have found it, because the green candle indicates that even though there were sellers in the market earlier, the buyers were able to overpower the sellers and change the direction of the market from bearish completely to bullish. Then we have the bearish engulfing okay, this is an example of the bullish engulfing candlestick. You can see the bullish engulfing and the massive breakout to the upside. Then we have the bearish engulfing candlestick pattern where the red candle, the bearish candle, completely overshadows the previous bullish candle. This is found at the top of an uptrend and indicates reversal to the downside. And finally, we have the doji. And the doji is actually an indecision candlestick. It's made up of a candle with long upper shadow, long lower shadow, and very tiny body. Now, there are different types of doji. There's a regular doji, the long-legged doji, the dragonfly doji, and the greystone doji. Now, if you have the opportunity to learn all the names, perfect. But then identifying it is most important. Being able to identify it is what is most important. Whether you know the other names or not, just make sure you're able to identify the doji. Now, you can see by the side here, I wrote two things here. I wrote pin bar, rejection candle. So what is a pin bar? What is a rejection candle? They mean the same thing. Pin bar or rejection candle is any candlestick with a long upper or long lower shadow and small or tiny body. So the general name you can use to represent probably a hammer, a shooting star, a doji could as well be a pin bar, or a rejection candle. Now, there are some candlesticks that it may be difficult for us to determine whether it's a hammer or a shooting star or a doji. We still call them rejection candle because they have long shadows and very small body. Now, these candlesticks, they are also more effective when we find them around support and resistance zones. Just a second. All right. So they can be more effective when we find them around support and resistance zones. Now, I'll take you through all that, but firstly, let's go on the chart and identify some of these candlestick patterns. All right, so this is MetaTrader. I'll just show us a couple of these patterns. For example, recently I discovered on XRP. XRP is Ripple, is a cryptocurrency, instrument. Now I always tell people, chart is chart. Forex chart, cryptocurrency stocks, they're all charts. So it means if you can trade Forex, if you can decode the charts of Forex market, you can also trade stocks. You can trade crypto. You can trade any financial asset because it's still the same chart. The only difference is that these instruments, they have different characteristics, they react differently. Some are volatile, some are less volatile. But then the patterns you find in the Forex chart is still the same you'll find in other financial assets. So the first one I look at, like I said, is the XRP. And this is the XRP on the 4-hour time frame. And recently I found a very, very sharp rejection candle that formed a shooting star. That's a shooting star. This is shooting star practically on the chart. And, you know, here is the shooting star itself, a candlestick with long upper shadow and small body. And like we said, the color does not necessarily matter. But then if it's a red candle, it only indicates more bearish pressure. But this one is a green candle and it still doesn't matter. Now, after the shooting star, we now have the confirmation candle. You can see that the confirmation candle must be a full red candle. So while the shooting star itself can be a green or a red, the confirmation must be a red candle. That is a must. That cannot change. So here we can see a shooting star with a confirmation candle. And afterwards, what happened? We can see the market going in a bearish direction. So what I will say in essence, anytime you see a shooting star, you are looking for a sell. That's the beauty about candlestick patterns. They point you to the direction the market is expected to go. So a shooting star means you're looking for a sell. A hammer means you're looking for a buy. So once you see a shooting star, you've seen the confirmation candle. The next thing you're looking out for is placing a sell trade. It's just as simple as that. Now look at this particular one. The fourth candles after the confirmation candle were all bearish, and the price dropped to the tune of about 76 pips. Now, 76 pips is a lot of money. If it's on 0.01 lot, that's $7.06. If it's on 0.1 lot, that is $76. If it's on a standard lot, that is $760 simply by understanding candlestick patterns. That's how amazing, these patterns can be. All right, let's check out another example. I have another example of a shooting star on GBP NZD, also on the 4-hour time frame. All right, so this is GBP NZD, and we can see a shooting star circled up there. You can see it in the circle. Let me remove the circle. This is the shooting star, and next by its side is a confirmation candle, which is a red candle. In this case, the shooting star is still a green candle, but the confirmation is red. And you can see how the market crashed, just like a pack of cards afterwards. You can see it drop initially to about 250 pips, and it still dropped further to 424 pips. Now, this you can't get this on day trading on 1 hour. No, this 4-hour time frame, so it takes some time. But even at that, a swing, 400 and let's round it up to 400 pips. 400 pips on 0.01 is $40. It's amazing. Some people say sometimes that 0.01 lots cannot make them rich. It's because you didn't use it well. If you use it for swing, you know it can make you rich. 0.01, 400 pips is $40. 0.0.1, 400 pips is $400. One standard lot, 400 pips is $4,000 just by using a shooting star, a candlestick pattern. You see, the more you understand how to interpret your charts, the better a trader you become. And that is what PU Prime is bringing to you every now and then, giving you education, demystifying forex trading. You know, sometimes some mentors try to make forex trading like a mystery, something that cannot be understood. No, that's why you are here. We'll make the complex simple, giving you education, holding your hands, and making you better traders. And tell you it's only PU Prime that does that. All right, so we've seen the shooting star two examples. I'll go to a bigger time frame this time around. Now, you can find these patterns on any time frame, 1 hour, 4 hour, daily, weekly. You can find them. But then I would suggest for now you use them more on the lower time frame, especially for entry, like 1 hour. It's still very, very good. All right, so let's check the next one. I'll look at USD CAD now on the daily time frame, and I have some setup already captured on that currency pair. All right, so this is USD CAD. You can see I've already circled quite and labeled a number of patterns. All right, so here you can see here a bearish engulfing candlestick pattern. Let me remove that circle so that you can see it clearly. All right, this is a bearish engulfing candlestick pattern. A hammer means we're buying. A shooting star means we're selling. A bearish engulfing candlestick pattern means we're selling. A bullish engulfing candlestick pattern means we're buying. Now, this is the bearish engulfing candlestick pattern. And I told you something about engulfing candlesticks. The big candlestick itself is its own confirmation. You don't need any other confirmation after the main big candlestick. Now, in this example, you see that after that big candlestick, which is a bearish candlestick, a red one, the next candle which we are supposed to make entry on turned around to be a green candle. And that looks like probably a losing trade. No, I always tell my students when you are trading, you need to have confidence in the setup you're trading. If you're trading an engulfing candlestick, relax your mind. Price will not go back to break above this place. Whatever you are seeing that is against the trend is just a retracement. Price will go eventually in its original direction. All right, so let's go back. Now, there was a retracement right here. Afterwards, what happened? Price still continued selling. So don't be scared. You know, erase the emotion of fear. Price still dropped. Despite that retracement, we still had a drop of as much as 80 pips on USD CAD. All right. Now, here again, we have a bearish engulfing candlestick pattern at a resistance level. Now, I said something that candlestick patterns are more effective when you find them around resistance and support. So here we have a bearish engulfing candlestick pattern. And at the close of the confirmation candle, what happens? Price dropped low to 381 pips. That's massive. 381 pips. Now, this is possible again because it's a daily time frame. You can have such massive move, which can take days. But then if it's on a 1 hour, probably some 30, 50, 60 pips is actually possible on 1 hour time frame. All right. So that's the power of a bearish engulfing candlestick pattern. You can see two examples right there. Now, the next one here is a bullish engulfing candlestick pattern. You can see here, this is a bullish engulfing candlestick pattern. Now, this one didn't move so much, but nonetheless, even if it's a little movement, it's still profitable. 79 pips. It even went as high as 97 pips. It's still all good. Still all good. 79, 97 pips is still very, very good. Yeah, thank you for that feedback, Mr. Ogojuku. Mr. Ogojuku just posted, wow, I'm glad I joined this call. And that's it, because we share tips to make you a profitable trader at PU Prime. That's what we're known for. All right, let's make some progress. Now, if you look here, you can see there is a rejection candle here, or a doji. It's a candlestick with a tiny body and very tiny tiny body and long lower shadow. Anytime you see a candlestick like this at the bottom of a downtrend, it indicates possibility of reversal in the market. Okay, I think somebody just joined now with his mic on. Please make sure your mic is muted so that you don't cause distraction for this class. And I also said something that when you find rejection candles or candlestick patterns generally, they are more effective around resistance and support levels or zones. There is a minor support here for this rejection candle. And what happened afterwards? Price went to the upside. Now, let me tell you one truth. Some people, do you know how they trade Forex? They look out for candlestick patterns on higher time frame, look for entry on lower time frame, and boom, they make money. That's how some people trade Forex. When I say some people, including myself, it's part of my strategy. Just look out for candlestick patterns. It makes the work easier. Go on a higher time frame. If you want to make entry on 4 hour, go on if you want to make entry on 15 minutes or 1 hour rather, go on 4 hour time frame and identify candlestick pattern, especially around resistance or support levels or zone. Then go to a lower time frame like 1 hour or 15 minutes, trigger your entry, and boom, you earn money. It's not meant to be complex. All right. Now, I've shown you shooting star, I've shown you bullish and bearish engulfing candlestick pattern. Now, let's focus more on rejection candles. Like I said, the rejection candle is any candlestick with long shadow and small body. Sometimes it's difficult to classify it either as a hammer or shooting star or any other one. So we just call them rejection candle. Now, look at this example here. You have rejection candles, and a second batch here forming a resistance. Okay, somebody is trying to distract this class. And if that comes up again, I might have to. Okay, let's go on. But please, no distraction. Okay, so John, stop. Someone is reporting you. You're distracting the class. John, just stop that, all right? Okay, so you can see we have rejection candles on the daily time frame at resistance level, and that led to a massive reversal in price. Anytime you have rejection candles around resistance or support levels, the next thing that is expected to happen in the market usually is reversal, because rejection candle itself indicates indecision. And after it's hit a resistance or support level, most likely the market will reverse to a new direction. So here you can see two rejection candles different, two here and a second here, forming a very good resistance up there, leading to a massive crash downwards. So anytime you're analyzing your charts, these are things you can look out for. Look out for rejection candles. Look out for a hammer. Look out for shooting star. Look out for bullish or bearish engulfing candles. And I tell you, it will really point you to the next direction the market is expected to go into. Now, I'll look at Euro NZD. I've marked some setup there. Now, all right, look at this example here. We have this big rejection candle forming a part, hitting a resistance, a previous high, forming a resistance zone here. And that led to a massive reversal in the market. All right, just a second, please. Okay, Ajayi Kayode, which one are you talking about?
The last one you just make examples.
On this current chart?
Two rejection candle. But in that level, there is no previous resistance there for us to actually know that.
Okay, are you talking about this specific chart on Euro NZD? This one that's on the
No,
screen now.
the previous one.
The previous
This
one.
one we can see the resistance level.
Okay, which one was that? Was that USD card? Let me check. Um,
At least daily.
is it this one?
Yeah, this one.
Okay, which one of it are you talking about now? There are three levels I marked here. Is it the first one? Is it this? Is it 2 or
Yes,
3?
yeah, that's the one I'm talking about.
Which number? 1, 2, or 3? Hello, Mr. Ajayi Khalde. Which one? Is it
One
number
and two.
1 and 2? Oh,
Yeah.
it's not difficult now. For number 1 here, there is a support, there is a low, and the tip of the rejection candle falls in line with that low. So that's a support zone.
Yes.
We don't ignore the shadow. It's still part of the candle. It just means that the candle hits an area where it could not break below, and as such, there was a reversal. So it's still very valid to form part of the support zone. In fact, if I want to take it a step further, let me see here. Fine. You can see here that this support zone also still moved. If you want to extend it to this other side here, you can see it's actually a resistance turn support. It's a resistance on this side, the tip of the candle here, the lower shadow here, and the lower shadow here. So that's a key level when you have resistance turn support. So definitely that could lead to a reversal here. Is that clear, sir?
Yes, clear.
All right.
Thank you.
You're welcome, sir. Okay, so let's go back to the chart I was on, and that's Euro. Let me check again. I think that's Euro NZD. Yeah.
John.
Okay, so I think just a second. Just a second. All right, so let's continue. I think those who are disturbing us have been kicked out. All right, so here we can see rejection candle. Rejection candles are very powerful, especially on higher time frames, 4-hour, daily, weekly. It leads to massive, very massive reversal in the market. Here you can see rejection candle on the resistance zone. If you understand, like we'll do it later, like chart patterns. Now this eventually formed a head and shoulder. Okay, I think I'm not drawing it correctly. Let me do it again. Or let me zoom this one out first. Okay. Now, the tip of that rejection candle formed a part of the head. That's the shoulder, the head, the second shoulder, and then a massive drop. Massive. 426 pips. But then it all started with the head with the rejection candle, which formed the reversal. It's because of this rejection candle that we had that massive reversal. In fact, there's already a move down here first before a retracement, which formed the second shoulder. So these patterns, and you can also find candlestick patterns even along trend lines to indicate continuation or reversal. Look here. They even form part of chart patterns also. I'm trying to, okay, you can see here a rejection candle. The trend line is going upwards. It's in an uptrend. This trend line is in an uptrend. Then we have this rejection candle moved up a little, retracement, then further continuation. It's still the effect of that rejection candle that caused that move. So you can find rejection candles or candlestick patterns anywhere on your chart, and they can point you to the next direction of the market. You can see here also we have the resistance and the rejection candle. This one is a morning star, though it's not part of what I taught you, but it's still very valid also. So we can always scroll through our charts and identify candlestick patterns which can point us to the next direction of the market. See rejection candle there. You will find a lot of rejection candles if you check different charts. And it's one of the easiest ways to trade. One of the things I teach is this. If you can look on the chart and find a rejection candle at the close of the daily time frame, what it indicates is that most likely the next day the market is going to reverse. If you find a rejection candle at a resistance level at 10 p.m. in the night, for example, when the day is closing, I can guarantee that most likely the next day that instrument will likely sell, except if market condition changes. The same thing if you find a rejection candle at a support level to close the night. This is what I'm saying. This is a rejection candle. This particular one, it closed at a resistance level to end the day. See what happened next day. Massive drop. You just use 1 hour time frame to enter, and boom, that's it. Can you imagine someone picking this kind of trade on 1 hour the next day? And this went as low as 187 pips in one single day. You can do the same with 4 hour time frame. Then that means you want to enter on the lower time frame, like 15 minutes or 1 hour. Okay, what's the difference between rejection candle and a hammer and shooters? I've explained that. There are times when it's not too clear to identify some patterns. It's not generally the word rejection candle or pin bar is used to represent any candlestick with a long shadow and small body. It could be hammer or a doji. It can be any one of them. The rejection candle is a general name used to represent all candles that have long shadows and small body. So this time we may not be looking specifically at which particular pattern it is, but then looking at that. Okay, we're having some people coming in to disturb this class, and sorry, I have to sanitize the group. All right. Now, there are times we find a special type of candlestick that can lead to reversal. This is a bullish engulfing, and we call it tweezer top and tweezer bottom. Usually it's like a set of twins, two candles, one bearish, the other bullish, having same size. Sometimes it may not be exactly same size, but very close, like this type of a candlestick. Anytime you see a candlestick like this, where they are almost or exactly the same size, where one is in an uptrend, the other reversing downward, it always leads to a reversal. This one is called a tweezer top. The opposite of it is a tweezer bottom. I'm trying to see if I can find, this is very close to a tweezer bottom, not exactly one, but close. All this also leads to reversal, when you are trading in the market. But if you are picking anything from this class, you should pick the word rejection candles. Candles with long shadows and small body. It can lead to massive
No one cares.
reversal.
Over here, bro.
All right. Can chart patterns supersede candles? Of course, you use them as the comp. So you cannot say one supersedes the other. It depends on the pattern. I'm responding to Dauda, Mr. Dauda. So it depends on the pattern you're seeing. If what you're seeing is a chart pattern, flow with it. If it's a candlestick pattern, flow with it. But sometimes, in some occasions, it's possible to see a candlestick pattern on a higher time frame, which will form a chart pattern on a lower time frame. I've seen that happen many times. You may see a candlestick on a higher time frame, like this same rejection candle I'm talking about. If you check a lower time frame, it may form a chart pattern. So it's not as if one supersedes the other. It's just how the market is reacting. Don't forget that the market is moving based on the forces of demand and supply. So these patterns are just the activities of the market. So the activities of the market that can point us to the next direction of where the price is going to. I hope that's answered the question, Mr. Dauda. So that's all I have to show us this afternoon. Sure, all patterns can be used to trade gold. Gold is a financial asset. I told you all this pattern works on all financial assets. It works for currencies, it works for stocks, it works for indices, it works for cryptocurrency, it works for commodities like gold and crude oil. So it works for all. Once it's financial market and it's a chart, it works. Fabulous. We need a recording after the class. Definitely you're going to get a recording. Just watch out in your group. You're welcome, Mr. Ogochukwu. All right, that'll be the end of this session this afternoon. I believe you've picked a couple of things here which could make you a better trader. Don't forget to join us. Anytime we drop a link to our training, make sure you join. Okay, see you again some other time. Take care and bye-bye.